RealTalkTwinCities.com. I'm Eric Pirius with Bell Mortgage, keeping you up to date on all things real estate, along with Cheryl Kempen, Coldwell Banker Burnet, Donna Quanrud, and Elise is sticking around with us. She's from Azure Wealth Management. Thank you, Elise. Right now we're going to get into rates. What's the rate? What are rates doing? Do you think rates are going to go up? Are they going to go down? How much will it affect me? How does it matter in my life? Right now, the national average, this is an amalgamation, an average of rates, this isn't a rate, is 3 Donna's laughing. I have to say that. You know, when the guy talks really
We
fast.
know you get in a lot of trouble if you quote rates.
Right.
Sounds like a new drug, you know, Abilify. May cause premature death, and you might die right away, but don't worry, take it. The current national average is 3.88, which is pretty low. I'm sorry, actually that was last week's. This week is 3.83 for a
Even
30-year
lower.
fix. Right,
Yeah.
right. So it might be time. You might be asking yourself, you know, well, I wonder if that means you need a mortgage checkup. So when was your last mortgage checkup? If your answer is what's a mortgage checkup or never, then you should call me at 952-905-5757. Takes a few moments. You'll either find out that yes, I'm in the best position possible, or there's something I can take advantage of, like a no-cost refinance. And what's coming up? Well, I think that rates are going to stay pretty low for a while. The housing market slows down a little bit in the winter here. Just for some historical perspective, in 2013, the average for that year was 3.98. The predicted average was 4.25. For 2014, Fannie Mae, Freddie Mac were predicting that rates would be about 4.5. Turned out to be a little bit lower, 4.25. So right now the predictions for 2015 are for rates to go to 5.2.
Oh, yikes.
So if the prognosticators are wrong by the historical average of how much they're wrong, that means probably about 5%, and versus 4, that's 1 point difference. What does that mean to you as a home buyer, Elise? What do you think? How much does your buying power go down?
Well, it goes down. It makes me happy that my husband and I bought our home about a year ago
Okay.
now. But I actually like seeing rates go up because as a financial advisor, it means that my clients are oftentimes a little bit happier with bond yields, with market returns,
Sure.
depending on where they're
Sure.
invested. So
Yeah,
it's all relative. It really truly
That's,
is all relative.
cup half full on rates going up.
As I sit here with the real estate.
Elise, you might be ready for a mortgage checkup.
And I'm thinking, so what do? We
Well-
schedule the mammogram and then we schedule the mortgage checkup?
Yep.
Come on.
Wait a minute, what?
What do we?
Why do I feel like I'm taking crazy pills?
This whole checkup thing. It makes
How about
me
if I
think
answer
about-
my own question? Hey, Eric. Anyway, the answer to the question is, and this has to do with waiting. The cost of waiting is about $20,000 per half a point. So in other
Wow.
words,
We
right,
never could have come up with that.
Now,
Why
is that
did you
assuming-
even ask us?
Is that assuming that you pay your entire mortgage off, like a 30-year mortgage at that rate?
No, that's assuming that you're buying a house and the rate is at 4% versus 4.5. And again, you use the average $200,000 purchase. And so if rates are a half a point higher, your buying power is about $20,000 less by virtue.
Gotcha.
So if they're a full point higher, which is what we talked about, that's somewhere in the neighborhood of $40,000, $50,000. So that's impetus to don't wait, because if rates go, I mean, that's the cost of waiting.
So
Along
today, you could buy a house for $300,000, and if the rates go up, you'd be looking at a $260,000 home.
Exactly right. That's
Right?
exactly right. The other thing that affects it are prices, of course, and similarly with the rates, home prices, Fannie Mae, Goldman Sachs, there's the National Association of Realtors, Wells Fargo, a whole number of folks are predicting anywhere from a 3.1 on the low side to 4.9 on the high side, but somewhere around a 3 to 5% rise in prices. So that's another. So if you compound that with the rise in rates, again, that's a compelling reason to look at buying now versus waiting.
Right, and so that's important for sellers as well, because if you want to
Right,
get the highest gain on your property, you need to attract buyers that can afford to pay a higher price. So we want to encourage all of you, if you are thinking about buying or selling your home, to contact us at 612-735-0553. That's 612-735-0553, or realtalktwincities.com.
That's right. Get a market analysis, get pre-approved, get a mortgage checkup. It's very easy to do. realtalktwincities.com, or call Eric, the loan guy, 952-905-5757. So what about these flippers? We talked about that a little bit before. What's going on there? Is that still a thing, or is it going away, or what?
You know, there's not a whole lot of flipping going on right now. Investors are down to about 4% of the market, and primarily because the foreclosure market's dried up and prices are higher. So most of those properties are gone.
Mm-hmm. Okay.
So good time for the traditional sellers to be on the market.
Right.
So
Not
give us
competing.
a call, get
Very-
your home listed.
Very normal market. That's good. And then the mortgage interest deduction is something that we've talked about a number of times in the past. I know that that's come up again recently. Keith Ellison had introduced some time ago a bill to replace the mortgage interest deduction with a 15% tax credit on interest paid up to $500,000 of mortgage debt. He's saying that this would raise $200 billion over 10 years nationally, and the savings would be used to buy to house low-income Americans. But so far, Elise, you're kind of clued in on this. So far, we're still in the green. Nothing's changed.
Nothing has changed, no.
Okay.
And yeah, there have been some interesting tax proposals. Nothing has hit the floor yet, but we anticipate that 2015 will be again another year where things like internal buildup of cash value in your life insurance, qualified plans, so how much money you can put into your 401k or your retirement plans, those limits, even some of the advantages of IRAs may come under fire. So it's really important to pay attention. You know, when people start looking for ways to, when I should say our elected officials start looking for ways to raise revenue,
money.
Oftentimes it comes in the forms of additional taxation or reducing those benefits, and
On the backs of the
middle Americans, yeah.
Yeah.
Sadly enough, it's true.
Gotta love it.
So it is really important to get your mortgage checkup, your financial planning checkup, and make sure that you are aware of all of the tax changes that are coming up, because there are quite a few. I mean, all you have to do is think about Obamacare and penalties and changes happening there and different requirements. So Elise, remind everybody again how they can reach you.
You can reach me at 651-300-2456.
And if you want to know what's going on with rates, I can put you on Rate Watch. I can tell you what they are now. I can do a mortgage checkup, figure out if you have, maybe do a no-cost 15-year, how much you would save. All of those things, they're free. I am an expert. I've been doing it 15 years. I'm also honest, right, Cheryl?
You are, and I've known you for
Don't
about
laugh.
7 or 8 of those years, so I can vouch for you. And we can help you out as well, just watching the market with auto email alerts. And we want to help you. If you are buying, selling a home, refinancing your home, please reach out to us at realtalktwincities.com.
That's right.
And
That's
you
right.
can also call 612-735-0553. That's 612-735-0553.
Another benefit of hooking up with us is that you get connected to our resources that we have, and there's a number of them in every aspect of home buying, home selling. We know somebody that's good, so we can take care of that for you. Again, I'm Eric with Cheryl, Donna. Thank you, Elise.
Yeah.
We'll see you next week.
Bye-bye.